Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on just general equities here. We're going to look at the S&P 500, the QQQ, which is the NASDAQ 100. We'll look at the IWM, which is representative of the Russell 2000, which is the small caps. And finally, we'll look at DIA, which is our ETF for the Dow, which we've talked about in previous updates. The Dow has been outperforming. So let's start with the daily chart. It is December 5th. It's a Monday. Market's actually about to close. We've got about 20 minutes of trading left, so these candles will change a little bit, but probably not dramatically. So the first thing I would call out, we've been talking about this on our updates. Like you see these two lines here. These are from this gap that happened after a CPI print, right? So CPI print happens at 8:30 in the morning. This is the S&P cash. Doesn't trade overnight, and so the market had no choice, didn't have a way of reacting during the event, and so we had a massive gap down, and then we continued to roll lower. So this gap has been here all this time. We've been trading underneath it, and we finally exploded through it. I mean, look, we exploded through, poked out the top of it, and now we've fallen back through, right? And so that's important in a way because we talked about that being a logical target, a magnet, and now we gotten to that point. So this puts us in a uncomfortable position if you want to be bullish, and I would say there's no reason to want to be bullish. Just follow the evidence. So the evidence tells us we have a daily cycle top on Thursday. That was day 34. And I'll delete these lines now, just for the sake of minimalism on the chart. And so we have our daily cycle high potentially on Thursday. We think that's the case because we now have a swing high. So the high Thursday marked the high, and the low from that day was 40.50.87. We're now solidly below that. In fact, we just slipped below 4,000. And so we're on day 2 of a weekly cycle decline is what we suspect. Notice we're also crossing below the 10-day moving average, which is this blue line here. That's something that you would expect to happen as part of the daily cycle decline. We did have that happen here on this little decline. But my suspicion is we're going to make a move at least below here and probably down to this line, right? So ultimately the 3,900 area becomes a real line in the sand because below that, we start to violate the monthly swing low that's in place, and we start to kind of break structure. Because right now, and we're certainly going to break structure on the daily chart for sure, but this is your structure right now of nice higher lows, right? This last one I just drew is probably not going to stand, right? This is not going to remain. We're going to continue to bleed. We're going to fall below this most likely, and probably below this. We maybe find support maybe around here, around 38.60. So that becomes a false breakdown of the 3,900 area. That would be my suspicion. And we say all this knowing that the FOMC meeting is coming up next week, on the 14th to be exact. So let's just draw that out, right? What would that look like if we get to the 14th? This is my base case, right? There's no reason why the market is going to bottom before the meeting. And so that doesn't mean we're going to collapse and go like massively lower. But I see a world where we go sideways to lower from here beneath this swing high until we get to December 14th and we have the meeting with the market, right? And so that would be a daily cycle of 43 days with a top on day 34. So it would be perfectly right translated. It would be totally fine, benign, right? So you could see a world where we just kind of, maybe kind of gently make our way down to like this area right here, right? Before some kind of bounce. Now, is the bounce going to be strong? That's going to depend on what the FOMC, like what they say at the meeting and like the press conference, etc. But you could see a world where we do this and then that, right? That's your bullish scenario. At this point, again, I don't see a reason why the market would bottom before the Fed meeting. So that's a good that's a good level set, I will say. And on the weekly chart, it's just an inside week. So between 4,100 and 39.37, it's just an inside week. Again, because we're in daily cycle decline, I suspect we're probably going to make a low below here, maybe an undercut, but probably not go crazy because the market is waiting on the Fed to understand what's happening. And on the monthly chart, there's only been a couple days, like 3 days of trading, so very early, but we do have a red candle for the monthly chart so far. But as long as we stay above 39.05, this swing low from September is in place, from October. That's the level that we start to get nervous if we make a if we go below 3,900, then all of a sudden this swing low is no longer in place, and that opens us up for the possibility that we're just continuing on this downtrend, right? That this becomes a lower high and we make a lower low, another lower high, another lower low on our path to like the low 3,000s potentially, for instance, right? And into Q1. So that's going to be really important to watch to see if that scenario still kind of remains on the table. So that's SPX. Let's look at the QQQ. And it's very similar story for all of these, just obviously different levels. So we'll talk through what those levels are specifically. Okay, so for the Qs, let's go to the daily chart. And so that same condition here, right? We have our daily cycle high. I believe that's the same day, 34. Or wait. Let's see here. Yeah, same deal. So you would expect that we pull back to at least like the 280 area here, and it looks like we are going to close below the 10-day moving average, which you would expect again in a daily cycle decline. And on the weekly level, same kind of idea, inside week between 295.75 and 279.17. So you would expect that 279.17 area to get tested. So that gives you a good, yeah, that's only about $7 down from here. So we probably undercut that by a little bit. But of course, again, we have the Fed meeting, the Fed announcement next week. So that's going to be a huge catalyst. So for whatever happens this week, I don't expect will be incredibly dramatic. And this is your kind of monthly picture. Again, very little trading happening in this month so far. But the monthly swing low level is 284.60 for the Qs. So that's important. And if you go to IWM, this is looking really tenuous. Interesting. So IWM is actually below the monthly swing low level. So what is that? October had a low of 162.50. Right. So October is your potential long-term cycle low. And so we're now below the high from that month, which means this swing low is no longer in place. It's being threatened. Now, it's very early in the month. A lot can happen. Also be aware that the low from last month was 174, and we're up here at 182. So that becomes a magnet on this daily cycle decline. And let's look at that daily cycle decline. So again, so it's the same picture as most of them, except this is a little different in that IWM is more of a double top, whereas that day 34 high for the S&P was a real higher high. So it's weaker is the point. And again, we talked about those levels on the higher time frame. You can see it wants to break down from this kind of cluster here on the daily chart. And finally, let's look at DIA, which represents the Dow. And again, this was the strongest of them all. I mean, look how vertical that is on this daily chart. I mean, my God, compared to the other ones. But all the same, it has printed a little swing high here itself. And so you imagine we come below this pivot at the very least at 336. Well, yeah, I would say maybe we're testing the like 330 area. That's really not even that much lower from here. Let's look at what the weekly chart tells us. So the weekly chart, inside week, just like the other four indices, the low is 336. So we're probably going to test that level that tells you. And then you can kind of see this kind of structurally. There's an important low around the 333 area. So my sense is anything above 330 is actually pretty healthy and just a pullback off of this massive base. I mean, as of last week, it was like 7% off its all-time high. So, in a year that's obviously been very rough for most indices. So the Dow is definitely leading for now. And if we look at the monthly chart, it, like everything else, is still red for the month, but it is very early, so a lot can kind of turn around. But that's important to kind of be aware. And for the Dow, the low actually would have been in September, right? So is that right? So the low was 287. Oh no, actually we didn't make a slight undercut low in October. So for the Dow, for the DIA, that level is 329 essentially, rounding up. That's your monthly swing low level, the level we need to stay above, remain above, for this to be a nice big monthly swing low. And eventually I'll flip over to the quarterly chart. This will become a quarterly swing low if we can make a move above 340 43. That would obviously happen only after we print the daily cycle low. So now is not the time to put longs on. We're moving into a daily cycle low. It'll probably last at least until the Fed meeting next week. So we're probably going to see sideways to chop for at best is my sense. But we'll be watching it closely. And again, I'll say this is going to correlate with a lot of other markets. If you're like a specifically, let's say, a uranium person or etc. Of course, everything has its own idiosyncrasies, but things are going to get kind of dragged in this direction is my sense. So we'll leave it at that. Thank you for watching today.